Over the past 476 days, Bitcoin has rallied 376%. Over the past 49 days, Bitcoin has gone down nearly 25%. This has a lot of people worried. How can something that goes up remotely come down? It never does that. And if it does that, what does it mean? Obviously, it must be going to zero. I'd like to pass you across to Peter Lynch, who has some very important things to say about retracements.
What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly, but we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen.
The important thing to understand, Peter Lynch was talking about the stock market. Retracements of 10%, they're pretty normal. 20%, they call it a technical bear market. But retracements happen all the time. Price is always moving in a wave. It's always coming up and down and up and down. It's all over the place. And a lot of people think that price just moves in a straight line. It does not, and it never has. What are we seeing here when we look at the S&P 500, when we look at the NASDAQ, the Dow, and the Russell? What is this blue line? That's Bitcoin's price. What is Bitcoin doing right now? It's seeking to put in a very big green candle known as a God candle. Good on you, Bitcoin. And what have we noticed here? When the S&P 500 came down, the NASDAQ came down, the Dow, the Russell. What did Bitcoin do? Well, it came down. Why did it do it? What's going on with Bitcoin? Well, Bitcoin cannot escape the stock market's gravity, and the stock market is looking relatively healthy at the current time. Ken, you can't be serious. I've read the news. They say the stock market's about to crash. Okay, well, let's look at the information technology sector. Looking pretty good. Looks like it's getting ready for a breakout to the upside. What about communications? That looks pretty good. Industrials, that doesn't look too bad. Energy looks good. Materials looks good. Consumer discretionary took a bit of a hit, but financials looks really good. If financials was looking weak, we could be in a lot of trouble, but it's not looking that way at all. What about healthcare? Yeah, that looks pretty good as well. What does it mean? People are panicking for no reason at all, which is normal. What do we see when we look across the key charts from TM6 inside the masterclass? The VIX is on the way down. The NASDAQ is on the way up. Crude oil has been hit. And what about bond prices? They're starting to normalize. What about bond yields? As the yield shot up, what happened to the major indices? They all said, oh my goodness, you're shooting up, I'm coming down. I don't like you at all. I'm going in the opposite direction. And that's exactly what they did. And that's how the indices feel about the US dollar currency index as well. And we can see things are starting to normalize. One really interesting thing, when we look at gold, gold is retracing. Gold is a really good indicator of geopolitical risk. But Ken, why isn't gold going up? There's so much geopolitical risk. We're just about on the doorstep of World War III. Hate to tell you, but we've been on the doorstep of World War III ever since the end of World War II. Having been inside financial markets for nearly 4 decades, one thing that I would like to say, and I would especially like to thank Gray Motion for his very kind comment. This is all about information that is no fluff and no drama. It is the real deal. Thank you, Grey Motion. That's really nice of you to say. One thing that we need to look at, US liquidity has been dropping down, just literally off a cliff, as it's done many times before. Typically, when it drops down, that follows the price will decay because US liquidity is just a way that the government inflates asset prices. What you can see right at this current time, US liquidity is starting to go positive. This is a really good sign because it may take a little while for it to take full effect, but the fact that US liquidity is improving is very supportive for the stock market, and you know what that means to crypto. Yeah, it's good. When people typically see negative price action, the first thing they do, sell everything. I'm going to sell the bottom and I'm going to buy the top. Of course, they don't do that deliberately. It's just the way that we're hardwired. When we see a green candle, it's like, whoa, this is the best thing ever. I've got to hop on that. And when we see a red candle or red series of candles, it's like, oh my God, this thing is going to zero. And you know why we feel that way? Because of the press and the media. Unfortunately, this is really normal behavior, and we've got to get out of our system that the red price action inside financial markets is bad. It is not. It's the ultimate time, just like what Peter said, to get in. It takes a very long time to understand how things work in the market, and right now a lot of people are worried that the PPI, the Producer Price Index, and the CPI, the Consumer Price Index, are going to come in hotter than anticipated. And Jerome is also doing his talking round, so of course that tends to move the markets. This week could be really volatile, but volatility is what makes you rich. If there was no volatility in the market at all, guess what your return would be? You got it, zero. It's very helpful to understand the price is always moving between structural support and structural resistance levels. And right now, Bitcoin is 62,596. It's looking really good. But what is the structure? Let's check it out. With an understanding of structure, you can see so many things. The first thing that we can see, that Bitcoin, when it came down, and don't forget, the major indices, the futures, are now starting to turn positive. That's pulling optimism inside and across all markets. It's little wonder that Bitcoin and the entire crypto space is going up. We have to keep our eye on this 62,200 level. There's a lot of structural resistance there and a little bit further down at 61,400 and 61,200 as well. The bulls are going to seek to push price past 63,200 and upwards. Remember that we got lost here in the past. It was simply too strong. If the bears get overpowered, there will be a lot of shorts up here and there will be mass short liquidations, which will just push the price higher. Typically, when we come into PPI and CPI readings, that's what the markets like to do. They hunt for stops all over the place, both to the downside and to the upside. If Bitcoin is going up, you can be assured that the alts will follow it. If Bitcoin is coming down, you can be assured the alts will follow it. It's just the way the crypto market works. Let's pop on the indicator. Ethereum is currently 2970 and it's making its way up to two structural resistance levels hovering around the $3,000 mark. We can also see at 2945 there's another structural support level, and down lower just around that 2877 mark and 2885 there are structural support levels there as well. When looking at XRP, we can see XRP has been a little bit weaker, but XRP is very good at leading out of slumps in crypto, as is ADA. Typically, because XRP is more hit and ADA is more hit to the downside, they tend to recover very quickly. Also keep your eye open for the memes such as Doge. What is the structure of XRP telling us? Let's pop on the indicator. Right now, XRP has just rebounded from this very strong structural support levels, and it's had to contend with this quite strong structure around that 49.80 mark, and just below that 50.30 mark what we've seen is a lot of overhead structure. That's what's getting in the road of XRP just going for it. However, if Bitcoin is strong, XRP will follow suit, there's no question. Trading the meme coins can be very, very profitable, but you have to be capable of holding into the downturns. These particular cryptos, the memes, are very volatile, but they have incredible depth, and Pepe is one of the best depth charts that I've ever seen. That means there's a huge amount of liquidity there, which is really, really important. And if you're in Pepe at the current time, you can see there's been a wide range of structural support, and Pepe is just passing over a structural resistance level. Not bad. And if it starts to get above that 910 level, wow, the fireworks could be on, because Pepe has been consolidating in a triangle and it's about to break it to the upside, or so we hope. As Peter Lynch said, you can't help but have downturns inside any specific market. But the thing is, when we look at the particular sectors on the stock market, they all look really healthy, and information technology looks like it's about to break out. This is really good for the crypto space. And of course, it's really good for the Magnificent Seven. If you're inside the stock market but you don't look at crypto, hopefully these kind of signals will help you out. Bitcoin and crypto are pointing to a positive start for the trading day inside the main markets. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.